Hi, this is Kirk with Forex Trading Secrets, and today we're going to be talking about how to deal with the fear of loss. Of all the things that scare us, loss can seem like the most terrifying. So there's loss aversion, and this is a big problem. Do you feel stuck between two loss-related fears? You're going to lose one way or the other, and which loss are you willing to accept? The fear of losing your passion for trading if you are not successful. These are just some ideas that I came up with as far as fear of loss related towards trading. Or the fear of losing money if you stay in the market. You might say that whenever you fear something, loss is at the root of it. So just think, well, when you find something that you're concerned about, or you fear of losing something, whether it's money or some other thing. Most people would rather avoid losing money than acquiring more. And so they go into a safe mode and not taking trades, for example. I'm afraid of taking a trade because I may lose, and so I would rather not lose the money than I would the chance that I might make more. The psychological impact of losing is thought to be twice as powerful as the pleasure of gaining. That is amazing. We really like to gain. It's really joyful. But the fear of losing causes us to make different decisions. We all make irrational decisions every day simply to avoid losing. We turn down opportunities that could be rewarding to avoid the risk of losing something else that feels really good. And we fail to invest in ourselves even though we're aching to expand, because it can feel painful to part with our money. We can't even know for certain that a risk will pay off. And that's where you get fearful, and so you don't do anything because well, is it going to, isn't it going to? Well, a risk, it can be really big or it can be a small risk, but it depends on how strong that risk is and your level of risk tolerance as to whether you'll accept the risk to receive the payoff or the reward. But we can choose to recognize when the fear of loss motivates our actions. You say, yes, I know I'm making a decision because I'm afraid. And we can make a conscious effort to overcome it. So let's talk about overcoming the fear of loss. Let your values and beliefs guide you as you figure out what your life can become. First of all, ask yourself, what am I afraid of losing? This may seem like an obvious question, and we don't even recognize that underlying feeling that motivates the fear. Whenever you have a choice to make, recognize in what way you're motivated by the fear of losing something. Are you seeing the whole picture? Are you looking at the big picture of things? Loss may be necessary to set up for gain. So many times you'll have a loss. Now in trading, I wanted to talk about, in the beginning, you don't necessarily have a strategy. You don't have the skills of using the strategy. Even if you do have a strategy, you may lose a lot, but by losing you gain experience, and that's setting you up so that eventually you can win and have those gains. When you attempt to see beyond the fear, you're better able to recognize if you're keeping yourself stuck. Can't see beyond the fear, then you don't even know you're stuck. But if you can see beyond it, then you say, oh, well, I'm just kind of keeping myself stuck because I'm afraid. And if you benefit from letting go of what you think you need. So you may think, well, I'm fearful, so the benefit's not as big as this fear that I have, and so I'm not even going to go after the thing that I really want. Use loss aversion as motivation to pursue what you really want. So if you can get rid of that loss, then you can move ahead and achieve some of those goals you would like to achieve. Ask yourself if you're losing more by not doing what you really want to do. And so there's another question. Yes, how much am I losing if I don't pursue? Am I losing my dream? That is a big thing to lose. Emily Guy Birkin suggests we can benefit from the fear of loss by charting our progress towards a goal. So if you have a goal and make steps to achieve that goal and make steps in that direction, maybe you make those steps small so you can not have big fear in the next step. It's a small fear, you can overcome that. But charting your progress, you say, oh, look what I'm doing. I'm getting towards my goal because I'm making small steps and I'm charting and keeping records of it. Try this. If you hang a large calendar on your wall and you put a star on every day when you followed your trading rules. Now this seems kind of elementary. You get a star. We did this with our children to get them to accomplish some things. And so do something to record when you've done what you do right and when you followed your rules. I'm not asking you to say when you've been positive or when you've been negative, but did you follow your rules? You can follow the rules and still be negative and have a losing day as far as not gaining any more money or any more pips. But did you follow the rules? That receives a reward or a mark or some indication that you're headed in the right direction. You'll create a psychological need to keep that streak going. And so then you keep on striving to progress and follow those rules each day. It's more of a psychological pattern, a habit building process. Regularly review your intentions, your motivations, and your goals. Think about what is your why. Why are you trading? What do you want to do? And they're common things. You want to get out of your full-time job. You want to supplement your retirement. You want to live a different lifestyle. Figure out what your why is. Now that why has to be bigger than your fear, or else you'll never move forward to your why. Sometimes we think we want something because we've wanted it for years, and then we feel afraid to lose the dream and all its related rewards. So if you started trading and you're able to stick with it, maybe it wasn't steady, you'd little starts here, and then you'd fall off for a week or two or a month or two and then start again. But you've been thinking about being successful at trading for years. Even you may have stopped for even a year or two, and then you come back to it. Then you're afraid that you'll lose your dream and all the rewards that you're going to get because of that dream. As we grow and learn about ourselves and the world, our wants change. I know that when I first started trading, of course I was a lot younger then, and I was thinking of all the toys that I could buy, all the trips that I could take, and all these fun things. Now I'm not thinking so much about all the toys. I still want to have things in a nice environment around me, but I'm thinking about more of stability, security, and what good I can do with the money I make. So your wants and goals change. That doesn't mean you have to stop your dream of being a good trader just because your why changes. You want to keep a big why, but the reason you trade now might be different than it was when you first started looking about becoming a good trader. Change how you see the inevitability of loss. The reality is that loss will happen. You're going to have losing trades. So accept that as part of trading. But you don't have to have a losing career in trading. There were some people that may not be able to trade. They can't get over the fear of loss, or some fear, or something's caused them not to be able to follow the rules. And so the reality is that their loss may be permanent. And so you have to decide if you're one of those people, or do you have the staying power to overcome those little losses, or make minor steps so you can overcome those losses in small pieces rather than trying to overcome a big hurdle. How we choose to see things dictates how we'll experience them. Would you rather see everything as positive or pointless? So you can see everything as a learning experience. So you lose. Well, you analyze that and say, well, that was positive. Okay, I followed my rules. That was a good trade. I didn't make money on it. Or if I don't to win, it's pointless to even continue doing this. If we can choose to look at things in a positive way, we can recognize that every loss provides opportunity for future gains in ways we can't even imagine. Let's think about a couple of questions. Why are you afraid of losing? And so you'll have to come up with that. What's causing you to have that fear of loss? Are you ready to trust in yourself and your abilities so that you can move forward? We're going to look at some charts now, and we're going to point out some trading setups and show you how it can, what it looks like when a good consistent pattern happens, and so you can have that good steady growth. We'll also introduce you to a trading tool that'll help you to in your steady, consistent growth pattern. It's called the Norwood Strategy Scanner. And so now we're going to go to the charts. And this is the 30-minute time frame. And we're looking at a pattern. There's been a lot of movement. The pound has been strong for this period of time because you can see that it's going up. Now I'm going to move out and a couple of times. You can see it was moving up, and then it rested, and then it took off again. And you can see that for this is a 30-minute chart, so it was going sideways last Thursday and Friday, and the market closed, and when it opened again, it just continued a pattern that has been moving up. Now, what I'm going to show you is a setup that if you were to see this every time, you would have a high probability of having winning trades. This one's straightforward right there. See how the market went up? And we'll look at these indicators in just a moment. I'm going to mark each of these impulsive moves. We have impulsive and corrective moves. And then right there. So it's easy to see this in history, but let's see how you can, let's show you how you can observe it and see it in as it's happening and get in tune with that. Now look at this bar right here. This would be a place we can see obviously that we would have made money. This is on a 30-minute chart. The 1 hour chart, it didn't hit where it was what I call is a 4-bar. And so let me just draw some other lines here. And I'm going to change these lines to a different color just so we can tell the difference. Now, what I've done here is there's two different signals that went off. This white line on this first position is what we call an early bird filter. Early bird meaning these two indicators had momentum in the same direction, and this filter, this bottom one, we call the filter, it was also the same color, but the middle one did not have to have any, it didn't apply in this situation. But the next one was a 4-bar on the 1 hour. A 4-bar here on the 1 hour, an early bird filter, and a 4-bar. So you could have received a couple of different signals throughout here. Now let's take these first two lines. And we're going to show you how you can spot these as you're going along. The 1 hour gave us a signal. On a larger time frame, early bird filter is a good filter, but the second time frame in this case would have been the 30-minute. It gave us a 4-bar in two different places. A 4-bar when the 1 hour is a 4-bar, so this blue line is a 4-bar, 4-bar. Let's go to the 15-minute and see what it is doing for us. Okay, right at that vertical line where the white bar is, remember the 1 hour had an early bird filter. That's the setup that we call it. And the 30-minute had a 4-bar right at that level, but the 15 didn't. And so it was 15 minutes later where the time frame said there's a 4-bar there. Now we have an 1 hour that has an early bird filter, and we have a 30 minutes, it's 4-bar, and we have a 15 minutes that it's a 4-bar at that point. Now that's if we use the 1 hour as the larger time frame. Now let's look at the 30-minute as the larger time frame. If you're able to sit in front of your computer, then you can use the 30-minute and 15 and 5 and still be okay. You can use the 1 hour as a time frame when you're sitting in front of your computer also, but you may have a different signal, or you may have to see things differently and not have as many of them come your direction. So now we know that the 30 is a 4-bar, the 15 is a 4-bar, 5 is on this first vertical white line. It was a 4-bar also. So on that 30-minute time frame, all the signals lined up. And so you can manually check that out. You see a 4-bar on the 30-minute, then check out the 15 and then the 5. And up to this area, it was a 65 pip move in that area, and when it went up and changed, it was like a 90 some odd pip move. This can be done automated or manual. We just went over the manual way of doing it, and what if the Norwood Strategy Scanner, that's what we said we were going to introduce that to you, told you that it had gone through and said this was lined up, that met the criteria, the 15-minute met the criteria, and the 5-minute met the criteria. You get a signal right in there, and so you have to decide whether you're going to take it or not. And of course that turned out to be a good move. Now let's look at the next line. On this one, the 1 hour was a 4-bar to start with, and the 30-minute was a 4-bar to start with, and the 15-minute was a 4-bar to start with. So that was an area right there. Here's a sideways area, so you may say, well, it has to break this swing high right here, but still right in there was another good move, and that one came on the 1, 30, and 15. Now let's see what the 5-minute would have said at that same point in time. The 5-minute, and you can see that it moved a great deal in that 5-minute, so you would have had to have acted quickly to take that trade. Okay, so you had 4 time frames that told you the same thing on that one. Now this next one is the same as the first one. What do we call that? Early bird filter. Early bird by itself is pretty good. The filter just confirms that it's in agreement and you have more momentum going that direction. And so we can say, oh, the 30-minute has to be a 4-bar. Well, was the 30-minute a 4-bar at that point? No. I don't like 2 early bird filters at the same spot, even though that may have been the better trade as far as looking in the past, but I want to see it so that I'm confident that it's going to give me some move here. Now we go to the 15. It was a 4-bar, and we go to the 5 just to see how it was doing. It said 4-bar also. So yes, people say I missed part of that. Well, here's the 20 pip move right there. It retraced and went up some more. So now let's go back to the 1 hour and look at this blue line. It was a 4-bar. 30-minute was a 4-bar, and the 15 was not a 4-bar. So we have to move over. So see, this really didn't make that much difference because that didn't move it. It moved a little bit. It's still in a retracement mode, but see how that filtered that out so you didn't have to sit there. It gave you the go-ahead to go up. Now let's see what the 5-minute, if it would have given us something. See, the 5-minute, if you were using the 30, 15, and 5, it did not give you go-ahead. It waited for 5 minutes, and then it gave you a 4-bar, which was a little bit of a trade, but not nearly as much as the others. That's the concept. Here's the different strategies you can elect to put on your chart for have the scanner search for you. I have 7 selected here, and you see 7 over here on all of the currency pairs over here. And you can decide the number of currency pairs and change that around. But we talked about an early bird filter. See, that's what that's set up to do. And it's the day through the 4 1 hour, the 4 1 hour 30-minute, the 1 hour 30 and 15. I don't have this one checked right now. I don't want that many signals when I'm not wanting to sit there and trade. If I get a signal, then I'll go look at it because it's really more important. And so what I'm going to do is take this one off. I want to take these 2 off because this is what I had going when I was in the trading room. And then I'm going to click flush. It changed everything to 5. And then I click save. Now I only have 5 strategies. So let me go through this again. Early bird filter, 4-bar, early bird filter, but the filter has to be on the correct side of the 0 line. See, I won't get a signal unless that's on the right side of the zero line going long. So that's the criteria for any of these scans to happen. This one is a 4-bar early bird filter, and then it would give you a signal. This we have 3 4-bars. Remember we talked about that? But it's an impulsive move, and everything has, this indicator right here, the trend indicator, has to be above the zero line going long or below going short, or you will not even get the scan. So that's how it filters it out, and how you can get these high probability trades. That's what the scanner will do to you, and it brings it up in your list. It brings it up so you can take trades. Now that's that part of it. Now I want to go through another part. How do we manage these trades? This is another step. Now you can manage it manually, and you can manage it within a couple of months. We'll have an automated stop which will manage it for you as part of the scanner. So we have something to find trades and bring to your attention, but we don't have the automated portion to show you how to manage. So remember, this is early bird filter right here. So on the 1 hour you could have had a signal there, and then we entered on the, in this case we entered on the 15-minute. Would have been better to manage this on the 15 or the 30. Possibly, let's say we got in right in here someplace, and what we're going to look for as one exit signal is when this shadow indicator changes colors. So we'll say right there's where we would exit it if we'd managed it on the 15-minute. Now let's go to the 30-minute and see what it would have done. Say we entered at the same place, and we may have made a few less pips because it may have changed, but pretty close. They're going to get about the same no matter which time frame you managed it on. Okay, let me share with you, this has been an exit signal we've had for years. When the moving average, or we call them hot lines, crosses or starts pointing down the other direction, and the shadow starts changing colors. Right there's an exit signal, and so you can see that that's right at the time the market turns. Here's one that is becoming one of my favorites. When the filter crosses back below the zero line. It was above the zero line, it crossed below the zero line. So right there would be a heads up, or the filter would have also triggered. That's on the 30-minute. So you can see how almost on the 30-minute you had two, well, I guess 3. I count the hotline and the change of the shadow color 1 because they're kind of together, and the second one would be when that crossed below. Let's see if it would have been any different on the 15-minute. Price range, that trade, no matter how you managed it based on the exit signals, would have given you the same thing. Now if you did that manually, you would have had to have been there, and you can have trading stops, and you can have a take profit set, but that's if you the automated portion, that's about what it would have given you. Now let's go look at the next one. Let's say we take this on the 15-minute, and we manage it when right in here. That's where we would have gotten out on that one. If we had done it when it came back across the zero line, it may have given you a couple more pips right there if we'd managed it on the 15 at that point. We're looking right here, and let's say that's the 30-minute. Let's go to the about the same point. So either one of those would have taken you out at the same time. Let's go to this last one. We entered right up here on this one, and it was when they're passing these fractals, and so that's not a bad place. So that's where you entered on the 15. Where would we have exited? Think in your mind. Look for those exit signals that I shared with you. When the shadow changes colors, or when the hotline changes directions, or when the filter moves below. Now this one, you would have received a better exit signal when the filter crossed, which would have been right up here instead of maybe 10 pips later. Okay, now I'm going to show you a different view of this. I'm going to take the same thing, but we're now going to say we entered this trade at the same time, but now I'm going to look at the 5-minute. If we'd managed this on the 5-minute. It took off here, and the 5-minute crossed below right there to start with. And so you would have been taken out there. I'm assuming that went below right to 0, so it may or may not have triggered it. But for sure right here, it would have taken, not taken it, would have said yes, close the trade. A few more pips. So you can, the time frame is another thing. Now that's a skill you have to develop. There's no amount of coaching or videos we can show you, because even the mechanical tools will manage it based on how you set it. But you have to decide, do I want to set on the 5 or the 15 or the 30-minute as my management time frame, even though I entered on the 5 or I entered on the 15. So those are some things that you can do as far as learning how to exit trades. So we've talked about how to do things consistent. Now, you do this mechanically. You do it a step at a time. Do it on a demo account so you don't have any loss involved, and become good at that. Then you transition to your live account. Open the smallest lot size your broker offers to start trading live with. And you may have a big, large account, but if you have to overcome that fear, open it so it's a very small loss. And if you've learned how to consistently have a mechanical method to do the same thing every time, that will help you to overcome that fear of loss. Are you going to lose? Yes. You can still lose doing the same thing I just shared with you. Two people can take the same trade. One will be profitable, one will lose. It's because of how they managed the trade. But that's taking the small steps to help you overcome the fear of loss, because your gain then on your why may be bigger than that very small step you're taking. So say you're trading dimes, and if it goes 20 pips against you, you've lost $2. That's no big deal. You should be able to handle $2. If you can't handle $2, maybe you shouldn't be trading. But when you start trading $10 at a time instead of 10 cents, and then you say, okay, it's $200, that's a big step. And so take the small steps. Eventually, when your account grows, your confidence grows, and your skill level grows, you'll be able to then overcome the fear of the loss. Now, we talked about the Norwich Strategy Scanner will help you to do the same thing on every trade. That will help you to overcome that fear of loss. Whether you win or lose, you're doing the same thing. And that's what professional traders do. They do the same thing, and that's a successful day. Remember, we talked about that star on the calendar, or some way of recognizing the consistent number of times or days that you follow the trading rules. You do the same thing every time. The rules may cause that you followed the rule, but there was a loss. But it's going to be a small loss. And then it will also help you to gain knowledge faster, because you're doing the same thing over and over again. If you do things different every time, then you're not going to gain the knowledge because you don't know what you did wrong. It'll help you to be more consistent in your trading, because the scanner doesn't care. It says the numbers are met, here's the signal. And then you can decide to get in or not. But you follow the rules. So now this is what we have for those who do not have our Nth Degree Trading course. There's a couple of different things. You can subscribe to the scanner, and you'll get the Nth Degree Trading course along with the PIP Club for $150 a month. Now, how that breaks down is $100 a month for the scanner and $50 a month for the nth degree course. So you can have the course material on time, or you can pay for it all at once and save money. If you times 50 times 12, that's $600. It's less expensive if you pay for it all at once. And you can check with us on that if you're wanting to do it that way. For those who do have our nth degree trading system, you get the scanner and you get the PIP Club for $100 a month. So no matter which way you're doing it, the scanner is costing $100 a month. And the scanner will and can pay for itself. The idea is to show that what is possible, and we want you to make money while you learn. So if a trader had a small account, a $500 account, and you traded one mini lot on each account, and you only made 15 pips a day. So you lost some, but you won some, so you netted 15. That'd be about $15 a day, $45 per week, and $180 per month. Now I'm only showing this as being 3 days a week because the PIP Club only runs 3 days a week, Tuesday, Wednesday, and Thursday. For in this case, you've paid for the nth degree trading course and the scanner, or you have made some extra money. If you only have the scanner only, you made some profit. Now, so you can make a little bit of a return as well while you're learning. Then when you do the numbers on your own account, if it's a larger account, then of course the numbers could be bigger, and those would be some more profit. You have a larger account, then figure that out. Now let's say that you made less pips per day. That's 13, 39, and 156. You're still paying for the course doing that. Now, there's 2 other days a week, and there's that you can add potential in here. And so we want you to make money while trading the foreign currency market. And the PIP Club is only an hour and a half at a session. And so that's 3 to 5 hours a week that you're in the PIP Club. So there's a lot of other hours that you could be trading to make the money to pay for the scanner and your education and get up to speed more quickly. So what the strategy scanner does is that it's for you to be able to take additional trades when you are not in the PIP Club. You learn how to use the tools. We have many people reporting back to us that they took trades at other times other than the PIP Club session, and they were making pips. So the strategy scanner will work for you, and what this means is you'll do less work and have higher probability trades and do it all in less time. So here's the links. If you want to take advantage of the scanner and the course, copy this top link down. If you just want the scanner, then copy the bottom down. And if you have questions, then you can email us at jed@forexstrategysecrets.com. Jed and I both respond to emails on this account, so we just figured to have one instead of rather having each of us have one. So what I'm wanting to share with you here is there's a template. When you sign up for the scanner, you download the scanner, you'll get this icon that lets you know that that scanner has been attached to your trading platform. Then you will have a template up in your templates box that will have all of the indicators in it. So you bring that template up, you get exactly what you're seeing here. You'll have the indicators up here, all 4 of these indicators. And so that you get that template that shows you just this. Now you can change the colors if you don't like these colors, but that's the template that will show up when you get the scanner. If you do not have our course material, that makes a big difference, because then you can actually see what a 4-bar is. If we didn't give that to you, you wouldn't be able to see that. That doesn't mean you know how to use it just because you have the indicators. The scanner will help you to learn how to use the scanner. If you elect to discontinue the subscription to the scanner, all the indicators go away. The template will stop working. But if you have the course material, you'll still have the material. The filter, you will not have that if you don't have the scanner. That goes away, but you'll have the other indicators because you know what they are. Knowing what they are is different than knowing how to use them. So you're going to see this when you subscribe to the scanner. So I wanted to let you know that you're going to be seeing the whole thing, and you can come to the PIP Club and see us as well as hear us. I'm going to leave this right here so you can type those links in.